All right, it's time for another installment episode update. Ooh, some muscle spasm going up my back. I am still working on learning to edit. I do have a class scheduled with one of my influencers, content creators. Ooh, strong muscle spasm. Um, I think the class is like on February 22nd. I'm excited for it. I'm excited for what I'm going to learn. I'm excited to apply it to the channel, and I'm excited to share the knowledge, apply it, and share it. I decided that this time I'm going to do a little video update about what service I provide, how I help and assist my clients and my community, and how I share some of those experiences. So this will be the product that I am able to offer on this type of platform. But for right now, it's still a vlog, so this is free game. Um, so I think I mentioned my years and years of experience, decades of experience working at the IRS. In addition to working at the IRS, I worked for a couple of tax preparation services. What encouraged me and inspired me to learn more about tax preparation. I took the pay preparers exam. I took the enrolled agent. I even, except for having the college degree courses, which means I don't have like 100, 200, 300 level courses in accounting that would give me the degree that would then qualify me to sit for the CPA exam. But I actually have been praying about it, weighing pros and cons, considering pursuing my education, furthering my education to be able to take that exam. But in the process of a life well lived, I have obtained a lot of experiential knowledge. Working as a tax examiner, applying tax code, which is the IRS Internal Revenue Service code. Everything is an acronym. And so in doing that, I saw and witnessed some opportunity for people in my community, people who were afraid of tax time, of tax reporting, who considered reconciling their taxes or completing their tax return either one or two ways, really, really high at the top of just now getting into earning money, receiving W-2s, or starting a business, and starting a family. And for a long time back, this would have been back in the early 90s, like 91, 92. Not having a lot of financial education. There wasn't a lot of information on the internet. There was no TikTok. There was no viral moments. There were no vast amount of resources. It was a lot of financial information that we just didn't talk about. Churches didn't teach about it. Communities didn't share about it. Banks didn't build those type of relationships. It was a lot of what Black and brown people were locked out of. We were just getting it how we live it. That mentality is sometimes difficult to break. It requires a paradigm shift. And so I myself was preparing my tax return. I would fill out my W-4 without any knowledge. They would take the money out of my paycheck. Once a year, tax time would come up and they would give me money back. They would apply earned income credit. Uh, for a while, they even had things like the advanced earned income credit, where you can receive more money in your paycheck. But a lot of people didn't understand it, didn't know how to use it, didn't touch it, didn't ask about it, didn't think about it. They would just get these giant refunds back every year during their children's maturation stages. The more I learned about tax returns, about what a tax return is, your tax return is actually just your reconciliation, your accounting, like back when you used to balance your checking account. Well, this is balancing your payroll account. Payroll taxes are withheld by your employer. It's not a secret formula. You can find out what it is, the amount that they take out for Medicare, the amount that take out for Social Security. All of those are formulas and schedules that get updated when Congress updates the budget. They're talking about the little freeze when Congress updates the budget. All of these mechanisms are set up in place to be able to change those calculators and schedules according to what the congressional allocated budget says those schedules should be set at. So it affects everything from your interest rates, what your savings account pays, interest rate paid to you, what your credit card companies charge, what loan companies charges, interest rates that you pay for credit, um, even your insurance. Um, all of those rates and schedules are attached to budget allocations, IRS codes, payroll tax calculators, all of those things. Um, so your tax return, which is reported out on a 1040 form. They used to have multiple forms: 1040EZ for simple filers, usually for students, 1040A, a long form that had built-in schedules attached. Now they changed the tax code, I want to say probably around 2017 or 18, maybe 16 even, to have a 1040 form, and then all of those other parts of the 1040 form are schedules. So everybody's tax form got shortened uh, to 1.5 or 2 pages. And then, unless you need large print, they do have a 1040R, which is large print. Um, but everybody's form got shortened, and then all of those schedules got included individually. Like you add a schedule or you add a form that the 1040 form directs you to complete and add to your return, depending on if you file an itemized, that's automatically schedule 1. Um, and then some other things that the tax code changes and updates to the tax code have done and have been done um, to be able to try to simplify. I believe that the uh, Green Infrastructure Act or Green, there's some kind of bill that changed the tax code. I can actually look up the legislation because, believe it or not, I actually read those. And but it's supposed to have begun the process of making it easier to reconcile. So all of your financial documents, income that you earn, income reporting documents are on like your W-2 is actually like a 1099 form, income reporting form. Your 1099s, 1098s, those are income reporting forms, so that at certain amounts, like a 1099 INT is your interest that is paid to you on money that you have saved. Your capital gains and losses is if you have investments, invest in stocks, not your retirement, because those are not investments that you control. Those are investments that that's a fund that you contribute to. But if you have personal investments, stocks that you purchase and you participate in the stock market, you have capital gains and losses, and you have a form that income is reported out on. Um, Other things that go on to your schedule, if you give a donation, you receive a tax for a 1099 for that. If you're paid not on payroll, if you're paid as a contractor or non-employee compensation, that's reported out on a 1099 form. Gig work, it's all of those reporting documents. What happens with those forms is the reason that they're reported on a form is because that's how the IRS has the tax records, the documentation of where the corporations, where the nonprofit organizations, where all the money went and how all the money is spent. Then you file your tax return for your own personal income reporting documents. So all the income that was reported that has been paid to you under your social security number, you file your tax return according to the tax code, and the tax code is designed for you to be able to report out accurately what happened, what you did with your money. So thereby you are not double taxed or triple taxed. A lot of people in our community feel like, oh, I just want to keep it simple. I want to report this, and that. But they actually do things that they can report out, they should report out, and um, they know that a lot of times, the scripture says, I always make a scriptural reference, people perish for a lack of knowledge. They know that people don't do better because they don't know better. So what I try to provide is the experience, is the benefit of my experience to make sure that what they do report out is what actually happens to them and they do better. Now, this goes for pastors, notaries, realtors, everything from that all the way down to strippers, babysitters, hairstylists, nail techs, and everything in the middle. When you spend your money, your income that you go out and earn on those hobbies and on those business interests, you need to make sure that you deduct all of your expenses connected to that business so that you are not taxed on that as income, as taxable income. The reason that it's important to report that out, separate that out, and reconcile that is because the portion of your income that is considered taxable income to the Internal Revenue Service is the portion that you pay taxes on, because they know that it takes money and you spent that money in order to be able to maintain a household. So the things that you don't like it's not tax on your mortgage. It's tax on your personal property, but you don't pay tax on your mortgage. It's not tax on your um I'm trying to think. I'm trying to explain it in as simple a terms as I can. It's not tax on your owning a vehicle. You pay personal property tax, but once you paid off the vehicle, if you don't deduct the interest that you paid on the vehicle, like your car payments don't have a tax attached to it. Your insurance doesn't have a tax attached to it. So when you spend that money that it takes to maintain a household on those items that are not taxed, the income tax is how you pay for the money that the federal government spends on services, on supplying utilities that come to your house, so you don't have to go out and pump the. And see, that's the other part. People don't understand how old the IRS is. It's not been here for a lifetime. Social Security hasn't existed for a lifetime. It hasn't been. So this is how the services are funded. Federal government services are funded. And when you spend that money on things that you do pay tax for, like groceries, like your cell phone bill, like your purchasing clothes, goods and services that you do pay taxes on, when you don't deduct that from your income tax, then you pay the taxes on the goods and services, and you paid income taxes. So you are double taxed. It's so prevalent in our community that they take it for granted, like they bank on it. You know, they have millions of dollars in uncollected tax refunds. They know where they got that money and how they got that money, but they're not gonna tell you. If you don't ask for it, you're not gonna get it back. So these giant refunds, earned income credit, that is a tax credit that is set up in the tax code, because they know if you have children, your children, for the purpose of your children, spend money in the economy, right? It costs money to raise a child. You pay taxes on that good. That earned income credit is to give you credit, a tax credit, remove that tax liability, remove the income tax for that portion of your income that you already spend towards taking care of a family and raising these children. So, they already know the formula, that it's a schedule. So the earned income credit is a schedule. It's like this. So at about at the point that you start earning income and you have a dependent, say you have one child, when your income gets, say you're like a low wage earner, they know there's only a certain portion of your income that you can actually afford to spend on goods and services and taking care of a child. So the earned income credit schedule pays you a portion of that income that the calculator applies to you having spent. So if, say you make $20,000 a year, the portion of your income that you had to have spent to take care of yourself and a child or a dependent is, because they could be grown, a disabled adult, or anything, but to take care of yourself and a dependent and maintain a household, they give you credit for that, so that you're not double taxed on it, because if you bought food with it, if you bought clothes with it, if you bought healthcare with it, you pay taxes. So they deduct that, so you don't pay taxes on it again, double tax. On that earned income schedule, it gets to its highest point around, I want to say it's 100 or 150% of median poverty level income. That's why some people who still qualify for like benefits and assistance also still qualify for the earned income credit, because we all know it takes a lot of money to maintain a household. But so the earned income credit schedule gets to its highest point around $18,000 for the year, between $18,000 and $20,000 for the year. Then it starts going back down. So if you're single and you don't have any dependents, you can earn out of the earned income credit, actually like around $20,000, around 25 maybe $1,000, because you also have a standard deduction to your income. So when your standard deduction, which means the portion of your income that is deducted from income tax, is the standard for every wage earner, every tax filer in the country. So you earn $30,000 a year, and just say the standard deduction is $15,000 a year, only half of your earned income is taxable income. Then if you have a dependent and you take the earned income credit out of that, the schedule still goes according to the whole $30,000, but only $15,000 is taxable. Is taxable income. The earned income credit goes by your earned income, the total scale, the total schedule. So if you earn over $50,000, your earned income credit is gonna go back down to from this $20,000 highest amount, even though 15,000 of it is not taxable. So only 35,000 of your earned income is taxable income, or even less than that, because I think once you have a dependent, your standard deduction goes up to like 20,000. Let's just round it off and say 20,000. So if you earn 50,000, only 30,000 is taxable, but you actually earned where the earned income credit is really, really small. So say at its highest point, the earned income credit is $5,000. When you start earning more, when you start earning 30,000, 40, 50, and after 50, I'll say after 60, it's no earned income credit. This is zero. It doesn't give you any benefit. It'll tell you that you earned over the income limit for the earned income credit. So it's really to support lower wage income earners who really take all of their money to live. Like, they're not investing in anything. They spend their money so that they can live and eat and work. But yeah, so when you get to that earned income credit, like, phase out your standard deduction, say you earn 50,000, you take the standard deduction, your earned income credit basically is a very, very small amount. Then you're at the point of your tax refund. So the amount in box 2 of your W-2, the amount of federal wages that they withhold, is based on the IRS taking a guess based on your income of what portion of that income is going to be taxable and how much you're going to owe. There's another schedule for that. It's the tax schedule. So if you're a $50,000 earner, 30,000 of your income is taxable. That withholding calculator is going to deduct what it expects, say $1,500, say 5%. Let's just say 5% tax bracket. Most people are about 8 or 10. Some people 12. Depending on your income level. But let's say it's 5%. So $1,500. 10% of 30,000 would be $3,000. So $1,500. That is about what should be in box 2 of your federal income tax. You file your tax return, you reconcile, you say, I made $50,000, 30 is taxable. You took 15, you should have took 12. You owe me $300 and you get your refund back. The goal is to actually come out even or close to even. Maybe get a small refund. Everything over you getting a small refund, because you file your tax return in the year for the year prior. So your tax season is January 1 to 12/31 of the tax year. So now it's 2026. You're filing your 2025 tax return. That tax season is January 1, 2025 to 12/31, 2025. And then you're reconciling. So when you get a huge refund back, they took too much out of your payroll taxes, which is what I was explaining in the earlier video. A lot of people are going to have overpaid because when the current administration, who shall remain nameless, God is in control, um, changed the tax code for 2025. They did not change the payroll tax calculator. So, same scenario. So the tax code was based on a smaller deduction. So, scenario that I just gave, repeat, $50,000. The standard deduction is 20, so you have 30,000 in taxable income. Well, the current administration will call it OBBB. I think that's the acronym that they use for it. I'm not going to say the name because my words have power and God is in control. Um that change to the tax code, which raised the standard deduction. So let's say now the standard deduction is not 20,000, it's 25,000. It's not, but let's just say, just to use whole easy to round numbers. So now your uh $50,000 income, only half of it is taxable. But they didn't change the payroll tax calculator. So your money that's being withheld for your paycheck, your box two of federal withholdings, is still based on when the tax code was, the standard deduction was $20,000. So they automatically took out more for the rest of the year, for half of the year, whenever it passed, July, whatever, even though they closed down the government for some months in there, none of that matters. Your payroll tax calculator stayed the same. They changed the bill, they changed the budget, but they didn't change your withholdings. So you were paying more in income tax than you would be charged for income tax, because now it's the end of the year. They're not telling you, oh well, we processed your payroll as if you were gonna owe have $20,000, $30,000 in taxable income, but you're only gonna have $25,000 in taxable income for $50,000 a year income earners. And now they're saying, oh, you're going to see the biggest refunds. People are going to see the biggest refunds. Oh, look at what we did for you. Look at how we helped you. Look at how. No, it's already your money. They should have been giving it to you in your paycheck. They didn't. And now they want you to believe that they're going to give it to you in your tax refund. When they do that, and when you do that, they know that you're allowing them to invest their money, to spend their money, to earn interest off of their money for free. They don't pay you any of it. They are trust and believe. If you have a savings account, and especially with all of the changes over the last under this current administration over the last year, you probably have a bump, an increase in the interest that was paid on your savings account. I know I did. Hopefully you got a high yield savings. Hopefully you have a high yield savings account. If you can afford to have a savings account at all and save money at all, hopefully you have a high yield. But you earned interest on the money that you left in your savings, because the bank invests that money, they spend that money, they make money off of that money, they loan that money out, they receive a return on that, and they pay you a percentage of that. When you get those giant refunds, you basically just let the government use your money to make them money for free, and they don't pay you any of it. They don't share the interest with you. They don't give you 1%. They don't give you a 0.5%. They don't give you. They don't spit on you if you on fire. So that is actually not the goal. It's not the flex that a lot of people in our community think it is. And I understand, believe me, because I've been there and I raised 3 kids and I was a single mom and, had to rob Peter to pay Paul and had to make ends meet and paycheck to paycheck and all of those things. So believe me, get it, understand when you got to wait on your refund to catch up on your bills and keep the gas on and, you know, all the things. When your car broke down, it barely made it. It made it to uh, October, and then you gotta try to wait on refunds or get a refund anticipation loan. That was a whole other scam. Um, when you have to do that to be able to just make it, believe me, get it, understand. But now we're older, wiser. We can live better. We know better, so we do better. You got to apply the benefit of that knowledge and experience. And you cannot allow anybody, especially playing in your face, to be able to use your money to make them money and not give you any money, not share any with you, and to do that for free when you know better, do better. So that is the tax information, the tax knowledge that I provide. This video is getting like super long. I'm gonna have to do another session, a part 2, give some more information. If you made it all the way to this part in the video, thank you for watching and thank you for your support. Thank you for listening. Thank you for subscribing. I promise I'm going to learn to do this better. I'm going to learn to talk in bullet points, and I'm going to learn to be more concise and be more informative, be more engaging. And I look forward to sharing more. I hope this explanation helped you, and I hope that the even better in the future uh, programming information that I share helps you even more. Be encouraged.